So yeah, breakup structure, optimal entry would have been there. Probably on the lower time frames, we would have seen, like on the 1 minute, we probably would have seen a breaking market structure happen here. You can see the fair value gap there. We trade through that and dip into this fair value gap, which would have been another nice entry here. So that would have been more ideal, assuming we were on the lower time frames. So we'll get that drawn out as breakup structure as well. And then it's very classic for price to rally lower, running into the 8 o'clock time before we see a reversal to then expand to the upside, especially considering we haven't taken out the Asia high. The fact we didn't take out the Asia high would have made that a target for price after taking out the low in the before the 8:30. So that's something to consider. We also have inversion fair value gaps here, and you can see how aggressively we've closed above that. So let's just get that typed out. Inversion fair value gap there, formed a normal fair value gap there, and then a normal one here as well. It's interesting because you can see how it finds support on older highs, and the way we closed above this high and above the inversion fair value gap says that price shouldn't need to come back down below here, especially with all the wicks down here. So as far as I'm concerned, this range was completely rebalanced, so price was then permitted to leave that range. And you can see how volume is supportive of that. If you look at the volume, you can see how volume is sitting above that level and then expands. So that's nice to see. What's also common between 8:30 and 9:30 is a consolidation. Now we don't see that here, which is completely fine, but we do see another setup form during that expansion. So we take out these highs, which is significant. And then you see we retrace nicely back to this level. Now what is this level? Well, it's the Monday opening level. So this is now providing a level of support. I usually make my openings dotted, but it's interesting to see we come back to that and then continue, and then we retrace again after 10 o'clock, and then we have a silver bullet that will probably form. So let's identify that silver bullet, but first we've got the bullish order block right here, providing classic support. And it does get a little bit consolidated. In terms of getting out of the position, I probably would have, it would have been ideal to get out of that position above the Asia high. So we'll put a sell there. Sure, we would have got out there. I wouldn't have bought after 10. I tend not to trade after 10. And you can see we consolidate. And you can see we're consolidating at this point. Like you see how price is gyrating around this level. It's obviously a significant price point. And I don't think we return back to it for the rest of the week, which is quite interesting. So let me just make note that this is a consolidation. And it's interesting to see how price gyrates around it and then eventually leaves it quite nicely. So that can stay like that. I'll put consolidation there. But yeah, there's no point in this kind of back and forth that we saw happening from opening. It's classic for Mondays, like especially with Mondays with big news embargoes. I wouldn't usually trade the London anyway, because it tends to do stuff like this, and then you can see clearly not until New York did we actually start to see expansion to the upside and some kind of decent delivery. So that's all cool. We'll go straight into Tuesday. And then we do the same thing. We look at the high and low of the Asia range for us to help frame and understand where price is likely going to draw to at what points. But you can even see here, this is heavy consolidation in terms of price delivery. It's not clean at all. So not ideal conditions. But you can see we grab the high. So after the high of the Asian range gets taken, it's classic for price to come and target the low, and that's what happens. It does it in a very ugly manner though, so I wouldn't want to trade in this, to be honest. So I'm not going to focus too hard on that, but then we expand. We had relative equal highs above here. And to be honest, once this closed above this swing high here, you can see we dipped down into a fair value gap. So you could trade it between the London kill zone and New York kill zone. You can see now the fair value gap forms right here as well. But if you were trading this, where would you target? Well, we had these highs up here to target. So you can see our price runs for that. And I'll put 2 buys there. Although, like I said, it's rare for me to even think about or consider trading between these ranges. And then my stop loss would have been below this order block, or at the midpoint of the order block, because price shouldn't need to go down to it, especially the fact that we've taken out both sides of the Asian range. We clearly have a bullish bias, well, assuming we knew we had a bullish bias, and then we closed above this high. So the fact we closed above the high that took out the Asia range high, the fact that's happened, when we come down into this, it should provide support. And you can see how we don't touch it quiet, but it's typical for price to respect the Asia high, and you can see it does that there. Another expansion, and then eventually price rallies and takes out that liquidity pool we had identified above this high. So let's assume we get out of our position above here. Make that red, and then the times that I pay attention to in New York are 8:30 and 8 o'clock, because you'll find that those times there's usually a setup forming. Similarly, in the London session, 3 a.m. and 4 a.m. there's usually a setup forming, but this isn't a good example, but I'll show you when we get further on along. Very classic again, when you have bullish New York sessions, it's classic to see between 7 a.m. and 10 and 8 a.m. price to go the opposite direction. So that's what we're seeing here. You see price falling lower, almost, well, creating a Judas swing, so to speak. It runs out sell stops below here. And it does it quite aggressively too, which isn't ideal. And then you can see that price turns around at this fair value gap. Why this fair value gap? I don't know. Let's see, is it in a discount or premium? It might be the midpoint of the range. So if we look at the range from this low to this high, you can see that that's the 50% level, and that's where we turned at. Why am I using this low? I'm using this low because it's the last significant low, and what I mean by that is I can clearly see we've got a down close candle and then this wicked low. So I could use this one. My Discord keeps breaking, guys. So I don't even know what's going on. I can't even see my Discord. Hopefully everything's cool. Close your mic. Am I too close to the mic? And okay, bless. I should be able to see the chat now. My laptop keeps like turning off. Oh, yeah, did it again. What the fuck? Alright, cool. Anyway, found support here, but again, I wouldn't be trading New York until it hits 8 a.m. and then I wait for a setup to form. And what you'll find is that I do the same in the London sessions. I'll wait till 3 a.m. and then I'll be thinking about entering, because that's usually when the setups form. So here we have a break higher, and then we pull back into this fair value gap right here. Classic ICT, really. And then we could buy that with the expectation to trade higher. Now, as we're backtesting, it's easy to say that we're expecting higher prices, but we need, in terms of me showing you what I'm doing, I'm showing you the setups as opposed to being able to understand where price is going. Like when we're watching this, we're assuming we have a level that we want to see get traded to. So on this Tuesday, let's say there's a level up here that we're looking to get traded to. When I see this form, then I'm comfortable to be buying it. But obviously it's hard for me to add that context in when we're just back testing on a daily 5 minute. I hope you know that. I hope you know understand what I mean by that. But anyway, and like in my daily uploads, like I always draw out where I want to see price go, and that's what I mean by understanding where price is going. So I have that expectation that there's a certain high or low I want to get traded to, and then as that's happening, as these setups are forming with that high or low in expectation, I'll be trading accordingly with these kind of setups at these times. So 8 o'clock, and then obviously 8:30 is the news embargo. That's where we have the large expansion. We run out these highs, and one thing I pay a close attention to definitely is the closing above highs. Now, if this just wicked above this high, it's not as strong as us closing above it. So when we see it close like that, that's like more confluence to me for me to be comfortable within my position. And yeah, especially when you see a big consolidation like this. So right in this range right here, this is all consolidation. And then the fact that price just completely overshoots it, you know, with no kind of regard for it, is hinting and is signature to me for price wanting to push higher, because you can see we don't struggle to get through it. It just completely trades through it and then runs on higher. And then I'll also mark out the 9 o'clock, 9:30, and you can see we reverse at 9:30 and also create the high of the day. So these times, definitely study these times. Like, you just know things are gonna form. This is the kind of consolidation I was talking about that typically happens between 8:30 and 9:30, and what usually happens after this is you'll either get a continuation into the London close, or you'll get a reversal. And here is an example of a reversal in that sense. But yeah, there's usually another opportunity to go long. Obviously you could go long in this, but I tend not to, because when you're in a certain premium and you're already, you know, close to your target, you shouldn't really be buying anyway, because you want to be buying in discounts, not premium markets. But we can definitely identify a break of market structure here. So I'm looking at this last up close candle before the down move. You can see we wick down below there a couple of times. So that's the break of structure to me. Why? Well, it's typical for the high to be made in New York. We've seen that happen. We've been rallying since Monday, remember? So we've only been moving higher. So we're expecting some kind of pullback to occur. And obviously on the higher time frames, we should have more confluences. But like I said, I can't really explain that in this context. But we're here. This is a break of structure. Again, it's not as strong as a close. It's nicer when price closes below these lows. And on the lower time frames, like the 1 minute, we probably will see some candles that close below it, which would help us. But this is still valid. And then you can see our price comes back to a breaker. Again, on the 1 minute, there's likely a breaker here, a high, a low, a higher high, and price is broken lower. So in this range, I'm expecting there to be down close candles on the lower time frame, and you can see price return to that, creating that typical breaker, return to breaker and fair value gap to sell off during the London close. So I'm going to put implied breaker, and it's implied because we can't actually see the breaker because there's not a down close candle here, but we know that just based off the wicks, this is code. This is code for a down close candle, so a breaker. And you can see how we come and respect the 50% level of that, and it's coupled with a fair value gap, which is this gap right here. So that's just a very nice setup. Obviously, it's easier said than done to get in on these kind of trades. Otherwise, I'd be a millionaire by now. But it's just a matter of training your eyes and being able to identify them. So we go short there. Where would you put your stop loss? Simply above the candle, which creates the fair value gap. So you could put it up here or even at the open. And then our target at that point, well, would be these lows, because this is a significant swing low. It's an obvious swing low, as in, you know, we came down, created a clear swing. And then you could also, well, no, you couldn't. I'd probably just target this low and then see how the day goes. But what I'm saying is that if we never took out the Asia range low, I would have looked at that as a potential target for price. But I don't think this is a week where that is an example, where there's an example of that, but we'll have a look. So the sell side liquidity below this swing low, and you could even let off some partials on the way down to be safe. So you could pay yourself here, and you could even, if you wanted to be extra safe, take off like a quarter here and just, you know, slowly get out of your position. But that's very smooth delivery down there. I like to see that, especially when candles close lower like that. I like to see this as well. Like we closed below, came back, rebalance. This is what you call immediate rebalance. ICT spoke about this. You can actually enter on these kind of setups, and like as this wick trades up into this wick low, you can go short in that. But yeah, that's what you call immediate rebalance. I've only done that once, I think, when I actually traded as the wick traded into the previous wick as a setup. But yeah, so you could go short there, and then what you'll find as well, again, as it's doing this, it's leaving fair value gaps. So there's an implied fair value gap right here above it, and that's because there's only downside delivery. So you know, the fact it's leaving this gap open, we have another implied gap here as well in this range, downside. So as it's leaving these gaps open, it's saying we want to go lower because it's failing to reprice to these levels. It's clearly repricing lower, and again, we're closing below sell stops, so closing below swing lows. So any kind of retracement and pull back into the range, we should be looking for shorting opportunities with the expectation to get out below some kind of consolidation, like such as down here. Again, easier said than done. But let's say we buy back our position there. I am going to have to keep checking on my Discord. Should be cool. And then got order blocks. Let me see. Do we trade back into this? No, we don't. So here is us moving into Wednesday. Typical consolidation between 2 p.m. and 5 p.m. New York time. But then I'll do the same thing again. We mark out the low off the Asia range. What I find about this week was that every London session was quite messy by the looks of things. And the high. And you can see we don't take out the low of the Asia range. So there's a level of bullishness that this Asia range, that this day is likely to have. The Wednesday, let's take a look. When we fail to take out both sides of the Asia range, it's typical that it's a very bullish or bearish environment. So here we trade higher, running right into London, and then of course we break lower and run for these lows. But let's take a look. This was where I pretty much went wrong this week, because I didn't anticipate this, and that was, I think, was it PMI or something, PPI, I can't recall. Anyway, I'm not going to look at this kind of price action, not the best, but when you have high impact news like that, it's again typical for us to see that kind of ugly price action. And what you'll find is that I think Euro at the same time, I don't think Euro was pressing higher. Let's have a look. Yeah, so although pound was clearly pressing higher, Euro wasn't pressing as aggressively higher, which was quite interesting to me. Whereas pound was showing a lot more strength at that point. So what are the times I'm looking at? Same again, we're going to look at the 8 o'clock, 8:30, and then 9 o'clock. Now 8:30 you don't actually trade, so to speak. It's usually 8 o'clock. Within the 8 to 8:30 time, a trade will form. And that's what we're seeing here. We're seeing a classic turtle soup form, high, low, higher, high. So you sell above this high, assuming you knew it was going to go lower. Again, that kind of news release, was it CPI or CPI, wasn't it? I can't remember. But what I'm saying, you can't predict every move in the market. So in terms of, I'm not even going to put that there because there's only so much you can do, and there's manual intervention. And it's also interesting, we didn't take out this high, so we're leaving relative equal highs up here. Yeah, damn, that went crazy. So we went straight for stops below here. So those sell stops were purged. Let's take a look. It's 8:30 there. What's this? 9:30, 8:30. Yeah. I mean, you could have always entered on this bearish order block, especially since at this point we still hadn't reached this low, and this low was would have been a target at that point, especially with a break lower like that. So if you really wanted to, you could short into this order block with the assumption that we are going to target this low, and that would have been a few little scalp right there. But again, you really don't have to trade everything. And then we consolidate at that level before leaving it, and then classic consolidate into the new day. Now this kind of London session is what I like to see, to be honest. So we'll have a look at this. How long have we got? Okay, cool. So we can look at that again, low and high of the Asian Asian range. And then look, we don't take out the Asia range low. So we take note of that. We haven't taken out the Asian low. And then what times did I say in London did I like to trade? We look at 3 o'clock for a setup to form. So we move this to 3 o'clock. Also 4 o'clock can be setups can form at 4 o'clock as well, but mainly 3 o'clock. And you can see we expand. So there's an expansion. We have a breaker structure here. I don't know if the lower time frames would have offered a setup. I would like to think it would have. Classic turtle soup, low, high, lower, low, break higher. So we've ran out a level of sell side liquidity below here. Expansion. And then again, like I said, 3 o'clock. After 3 o'clock, I'm now looking for a setup. We get a pullback. And where does a pullback occur? A fair value gap that's formed at the top of the Asia range. So there's a long in opportunity there. But then in this case, in terms of what we're targeting, because of this consolidation over here, we have to be careful. And if anything, we anticipate this to hold resistance for us. Because on a longer time frame, like in the higher time frames, we're bearish, right? So price should continue to find should be finding resistance at these levels. So in terms of going long here, ideally you don't want to be going long purely because we're in a bearish, program, so to speak. But there's a swing high above this high, this up close, and that could have easily been used as a target for price. So let's get that marked like so. But again, I wouldn't buy in these conditions anyway, because overall we're clearly hunting for lower prices, like prices quickly trying to get to lower prices. And then when I will show you the 4 o'clock as well. So if you put 4 o'clock, that setup tends to form there as well. There's a classic break in market structure here. We can see, again, I like to see this. We've closed below. First of all, we're taking out this little swing high. We get a close lower, which is nice to see. Classic high, low, high, high, broke lower. So this acts as a breaker. So as this candle creates this low, and we're like, on the lower time frames, it's likely price was playing around in this candle, and that would have been short an opportunity as a breaker for us to then hunt for, well, obviously the Asia low, because remember that Asia low never got taken then. So when we see a reversal, we then expect that Asia low to get targeted, and that's what happened. Now, all of this, I don't know about all this. This is messy. When we get there, we'll talk about it, but there's certain things that this market does, and you just can't quite grasp it. So as we see this break lower, fair value gap, I like to see that get left open. That's nice to see. I can use it as a breakaway gap. Again, immediate rebalance. So this candle, does it even trade into it? Oh, that's not an immediate rebalance. There is a gap there, my bad. But again, as price is trading through this and we close lower, that pullback will offer us opportunities for being short. Furthermore, as this candle closes lower than this fair value gap, so we've now closed through a fair value gap. This fair value gap should provide resistance now. It should act as an inversion fair value gap. So again, we've now closed, we broke lower, break of structure, taken out some kind of buy stops. It's after the 4 o'clock, and we've closed below this fair value gap, which was once bullish. So now it's a bearish fair value gap. So as price goes into that, what do we want to do? We want to be short in. Oh, we can short again. as price goes into that. And we're looking for it to respect the 50% level. So you can see we just about wick above it, and then price aggressive trades lower. Consolidation, we expect it. Why? Because they were consolidating here on the way up. This is what we call accumulation, so we expect distribution here. So this is fine. So you can take off some of your stops below, some of your position below here to help, what do you call it, partial your way out. So I usually use the orange candle to show that I'd partial there, and then like I said, I'd get out the entire position as soon as that Asia low is targeted. That's pretty much my, like, the Asia range is pretty much my setup. I do want to talk more about it, but it is really condition based, as you can tell. So again, what was I saying about the New York kill zone? If we're expecting lower prices, we want to see price trade in the opposite direction between 7 o'clock and 8 o'clock, and we see that here again. However, 1 second, guys. Okay, we see that here again, but it's quite exaggerated. So at 8:30, we do trade higher, and we continue to push higher back into the old low, which was interesting. And then we reverse at 9:30, I believe. We should reverse at 9:30. And these are the kind of patterns you need to start to identify. So at 9:30, we created the high of the day, and then we run lower. We saw the same thing just happen. We saw it happen, well, not here. Well, it kind of happened there, but where did we see it happen? Here, 9:30 creates the high of the day, and then reverses. So again, depending on conditions and your bias, and if you understand where price is likely to draw to, you can hopefully try and frame some kind of trades within that. 1 minute, I need to reply to this text message. All right. So, we've got a breaker structure here. When it comes to breaks of structure, they are hard to define because they do come in different shapes and sizes, as you can tell. But again, why do I like this one? We got a nice big candle that's closing below lows, below this low that was created, and then below this little swing here, and then you can see our prices ran off after that. In terms of breakers, we want to look at the last down close candles before the up move. We got a high, a low, a high, a high, and then price is broken lower. As we're trading through the last down close candle, if we're expecting low prices, we can sell into that. And again, you can see this kind of consolidation, as in there's a lot of up and down price action between here to here, right? This consolidation, it happens between 8:30 and 9:30. So again, that's typical price action for us. We anticipate between 8:30 and 9:30 to be for them to be some kind of consolidation, and then what will happen is there'll either be a continuation or there'll be a reversal, and that's what we're seeing happen here. And it's been able to identify that these things are happening over and over and over again. But again, so I'm looking at this last down close candle. In terms of setups forming, you can use the wick. Again, lower time frame would be a lot more appropriate for this, but you could be selling into this, and then you can see our price eventually runs. Again, taking out these relative lows. It did create, that's interesting. At the 8:30, it created another low. So there's relative equal lows created below there. So I'm just going to put sell side liquidity. And let's say we did want to trade that reversal. To be honest, I haven't actually traded a 9:30 reversal, but now that I'm seeing it happen so much in weeks like those, I might have to start anticipating them more. Because usually I'm more comfortable trading longs when there's like if there's a continuation. I'm usually good at seeing that form, but with reversals, I don't think I'm there yet. But anyway, we can sell into that midpoint. We can use the wick. Why? Because wicks are gaps too. So as soon as we closed below that, any kind of selling into that would have been appropriate. And you can see a clear. If you wanted to wait for a better breaking structure, you could wait for this and then enter on a lower time frame. And then there's another entry opportunity right here, as we're inside the Asia range. What you'll find as well, what's really good about the Asian range is that when you're in positions, so if say I went short here and my stop loss was here, as soon as we enter, and like look how aggressively we enter the Asian range, once we're in here, I don't expect price to come back outside the Asia range. So what I'll do is I'll look for the PD array that's just above the Asia range, for example this low or the midpoint of this fair value gap, which is the same thing, and then I'll drop my stop loss to there, because I'm like, well, now we're in the Asia range, price should respect the range of it, which we can see it's doing, and then, you know, either leave it on the downside or consolidate within it. Here you can see we just pretty much leave it straight away, again creating gaps as we're gapping lower, and then eventually once we're back inside of it, you'll see how it finds support on the lows. So look, we come back into it and you see this is respecting the range in general, so they're really useful. But anyway, where would I get out of this short position? Well, let's make that blue. That would have been a buyback. Probably below these lows, because after this 830 release, it created relative equal lows right below this low and this low. So there's relative lows there. So I would have gotten out of my position as soon as that entered. And then you can see there's a reversal, but I don't tend to trade at these times. And then we pull quite deep. And where are we pulling deep into? The breaker. Remember? High, low, higher high, and then we've broken lower. So we're looking at the last down close candles. So we can look at that range. If we drag that right out, you'll see how price respects that. And then moving into the new day, we've already traded to the breaker. So that means price shouldn't need to dip back in there. And that's why we see price running very quickly lower as we move into the Friday. In fact, I'm quite upset that I didn't see this, but that's why we're here backtesting. So that's interesting. But yeah, let's do the same thing. Finish up on the Friday. So what do we do? Draw out the Asia range. And this is what I mean. When earlier I said that if the Asia range high doesn't get taken, like if only one side gets taken, it shows it's going to be a really aggressive day, or it will come back and snatch it later on in the day. Because we were already heavily bearish this week, you can see price didn't even attempt to trade into the high of the Asia range. It just completely left it. So this would have said this is going to be a very bearish day, because one, we didn't even kiss it goodbye. We just left it. Wait, let me see. There. We did kiss it goodbye, my bad. I'm getting ahead of myself. But what I'm saying is that there was no way price was going to be able to come and take that high out before we traded lower, suggesting a very aggressive day. And that's what we witnessed on the Friday, which is interesting. And I can only imagine it's going to continue moving into the new week. But anyway, we've got the Asia range, trade low as we open. And then again, what times are we looking at? We're looking at 3 a.m. for a setup to form. So let's get that 3 a.m. delineated like so. And then we're looking at 4 a.m. as well as another potential opportunity. And I say 4 a.m. because 4 a.m. is hit or miss, to be honest. But between 3 a.m. and 4 a.m. it's similar to the 8:30 and 9:30, as in there's going to be some kind of consolidation, or there'll be a reversal, or something's going to occur between then. And you just gotta brace yourself, I guess. So here, what we've got a break of structure again below this low, classic. Nice to see. Oh, I'll put BOS. And this is what I mean. This is why the Asia range is so important. Look how we just trade to it and then leave it, like it's using it as a key level to key off of. And this is what you call. This is my understanding of support and resistance of certain range highs and lows that are formed. So as soon as, and again, it closes below this low, I like to see that. So we've closed below the low. Any kind of retracement, we have an implied fair value gap right here, so that we could sell into that if you wanted. And then stop loss would be above this high. And there's a bearish order block as well that is also getting traded into right here. Now again, obviously it's easier said than done, and I'm not a professional, but it'll be nice to think that one day I can trade with this kind of precision. And then you can see we break lower again, respecting bearish PD arrays. And we expect, you see there's a lot of wicks, we expect a lot of consolidation here. Why? Because we can see it happened here. So we're looking at if you look at all this back and forth price action, like, bear with me. it's a point of consolidation. So here, accumulation. On the way down, we anticipate there to be distribution at the same point, and that's what we're seeing happen here, as you can see, and then eventually it leaves it. But what I really like to see, and you can use the midpoint here as well. So when I don't like to see it spend much time in premiums of like consolidations, and you can see we instantly leave it close outside of this low, and you can see the volume again respecting. Yes, it can wick inside, but volume is respecting the the point of consolidation before trading lower. Just like volume is pretty much respecting the low off that Asia range. Is that the low? But yeah, you understand my point. So let's see. So where would we target? Well, we have a clear low down here that could get targeted. South side liquidity. That would have been a beautiful move to get in on, can't lie. One second. Right. I'm probably going to finish up soon anyway. Gap. We like to see gaps form. That can act as a breakaway gap. What's a breakaway gap? A gap that we don't want to see get traded back into. And it's like a signature for price to say that, okay, it's a signature saying, okay, we're going lower. If price should fail to trade back into this, as you can see, it does fail. And then 3 o'clock is where I said setups form. Now, here we get a retracement. Well, we've had a large expansion already running up to 3 o'clock. So seeing a retracement like this, not really surprising, but it's interesting. We dip just above that high, and then we break lower. So in terms of setups, this is where the 3 a.m. thing can get messy, and you might find yourself being a bit more cautious. Actually, to be honest, let me see. So this was that low I was talking about from, was it yesterday? Yeah, from the Thursday. So we'd get out of our position at this point. So we'd buy back our position there. Now that we've taken out buy stops, there's going to be some kind of retracement, right? So we see the consolidation at that low, and then we pull back, run above the high, and then after 4 o'clock, what happens? Another setup forms when we get a break of structure. Where's the breaking structure? Here. I like to see this close below that low, high, low, higher, high. I'm now looking at this last down close candle as a breaker. Classic. Sell into that. Stop loss above here. And then we can anticipate another run if we're that heavily bearish. Again, last week I was so convinced we weren't that I found it hard to trade because of it, because my heart was telling me no, even though logically we should have just been, we should have stayed stuck to the narrative that was being shown. But if I did, or if you do manage to stick to it, which I guess is the hardest part of trading, then it's times like these when you can comfortably enter on a breaker, fair value gap, and sell with the expectation to get a decent run back out of it. Classic, pull lower. Now I don't think we have any lows. Yeah, this when prices kept going. So there's no targets for me to show right now, but there would have been some kind of sell stops on the high time frames, maybe the weekly or daily that we would have traded to. Now, what do we want to see when we're bearish? We want to see between 7 a.m. and 8 a.m. price trade in the opposite direction, remember? So we can put 8 a.m. here, and what do we see? A rally. That's what we like to see, assuming we're bearish. And then we've got the 8:30, which I'm guessing is right here. Yeah, thought so. And then 9:30, which is here. Here's that consolidation I'm talking about. That tends to happen between 8:30 and 9:30. Classic. We pull back one more time, and then we dump again right there. But because we had such a big move in the early hours after Friday, trading the New York probably wouldn't be the best. Like I said, it would be quite messy in terms of delivery. As you can see here, there's a lot of consolidation. Here's a lot of consolidation. And then the afternoon session's all right, but then we get a reversal. So yeah. I hope you found this insightful. I don't see why on my Discord 21 people are showing interest, and then we go live and we get like 1 or 2 people, but over time I'm sure it'll get better. Let me just stop recording.